Welcome to the Real View podcast, where Ohio Realtors connect you to innovators and influencers, keeping you with the real view of real estate. Whether you're a broker, agent, first-time homebuyer, industry leader, or just happen to stumble upon our podcast today, you can expect to hear tips, tools, tricks, interesting information, and so much more from the experts in Ohio's real estate game. Everyone, and welcome back to the Real View podcast. I am your host, Allison Wiley. Joining me today is Jennifer Brown. She is a 27-year veteran in the mortgage industry. She has originated mortgages in Metro Atlanta since 1998 and is licensed in Alabama, Florida, Georgia, South Carolina, and Tennessee. In 2019, she became a partner and co-owner of Neighborhood Mortgage, Inc., founded in 2001. She takes great pride in her role as Vice President of NMI and serving her community and business partners as a trusted mortgage expert. Born and raised in the great state of Alabama, Jennifer relocated to Atlanta in 1897 when she began her career in the mortgage industry. Confusing to most, she is a huge Bama fan, even though she graduated magna cum laude from AUM with a finance degree. Jennifer and her husband reside in Alpharetta with their daughter and Black Lab, Bear Brian Brown Jr. In their spare time, you can find them hosting or attending a tailgate, spending time at their home on Florida's beautiful 30A, on the golf course, at the softball fields, or spending time with their large family from Kentucky to Colorado. Jennifer, welcome onto the show.
Thank you so much, Allison, and I hope your listeners won't hold it against me that I'm an Alabama fan, but thank you for not leaving that part out.
No, I didn't do it. We respect it. No hate to Bama, as fellow members of the, I like to say high class of college football. We appreciate and respect you. And you're not Michigan, so no hatred there.
Okay, good to know. We had some neighbors from Ohio, and my husband changed out their license plate. They took the Ohio plate off and put a Georgia tag on, and he drove around for like a year and didn't realize it. So that's our favorite story about our Ohio State brethren.
That's hilarious. Yeah, we can get a little crazy at sometimes, but definitely all love to our Bama fans. And like I said, you guys aren't Michigan, so you're all good.
I feel the same way about you guys. We're not Michigan fans down here either.
I love it. Well, great. Well, thank you so much for coming on and agreeing to talk to me about this today. We're going to dive into your experience. And as I mentioned in your bio, you have a ton of great perspective and insights into the industry. So I'm really excited to be hearing from you on what you see from your perspective dealing with your clients and how we can help people reach this goal of homeownership. And we're going to dive all into that. But before we get started, I would like to hear a little bit more about you, how you got started in the industry and what you do today in your company of Neighborhood Mortgage.
Well, thank you so much. I actually started my career in banking right after I graduated from high school. I went to work as a receptionist and then a teller. I worked my way into the commercial loan department and went to school at night at Auburn and Montgomery. And when I graduated, I moved to Atlanta, which my husband likes to joke when people actually use the roadmap. When you graduate from college in Alabama, they give you your diploma and a map to Atlanta. That's where everybody goes.
That's funny.
I moved to Atlanta and I just happened to get a job working at a mortgage company. One of my classmates from college had moved and gotten a job at a mortgage company doing second mortgages. If you can believe it, that was a thing.
Wow.
And so I was in what used to be known as subprime for a couple of years. That's where I got into the industry and learned the industry. And then I moved from there into retail. I was with Countrywide for several years, and I've worked for banks, many retail lenders. I moved to Neighborhood Mortgage, which is a mini correspondent, which means we lend our own money, but we don't underwrite. So we have about 20 investors that we work with, and I've been there for 10 years. I became an owner, as you mentioned, in 2019. So a lot of my daily duties are, needs of the business, running the business, but I also still originate. I like to think that I, have my finger on the pulse of what's going on in the industry because I am actively working with buyers.
Yeah, and I think that's what makes you such a good person to talk about this, because you do have that perspective, and you probably get, hundreds of questions a day of people coming to you, wanting to know more about this process. You are probably having to give advice and clarify things and help, provide solutions to any of their problems and issues that come up. So I'm really excited. I talk to a lot of, realtors on this show, so I always love when I get the opportunity to talk to someone who's still in our industry but may have a different perspective, and can share their insights and what they've learned and what they deal day to day basis. I think it brings a lot of insightfulness and just a different way of thinking about things. So super excited to have you on and to hear a little bit more about your perspective. So I guess let's just dive into the show. We are going to walk through kind of the steps to homeownership, how to do your lending, what types of properties that you should be looking for, and how to avoid some of those mistakes that maybe first time home buyers could commonly make. So I think we should start just at the beginning. Where should we start if we are interested in buying a home? What does that process look like? I know there's a really great resource you shared with me, and we're going to share with you guys as well. Tell us a little bit about step one of the home buying process.
Well, step one is to speak with the lender. And I think a lot of times buyers get that backwards. They seek out a property or an agent. They might find something online and then contact an agent, but they've skipped the step that is the most important, which is pre-qualifying for a mortgage. And that is the number one thing. And most real estate agents are going to want you to be approved before they put you in their car and take you out and start showing you homes. So that would be the first step, right? If you're a first-time home buyer, then there's a fantastic resource that Fannie Mae offers. It's called HomeView, and I know that you're going to put that in the show notes for the listeners. This is a wonderful resource for realtors to share with their potential buyers. It's really for first-time home buyers, but all home buyers should get pre-qualified because things change. People's situations change over time. So just because you qualified for a mortgage in the past doesn't necessarily mean you're going to qualify again. So I love the Fannie Mae. It's actually a certification process that you go through. It's got 7 modules. You walk through a budgeting process. You have all kinds of access to checklists like how to find a lender, how to find a realtor, how to save, how to budget, all the things that are super important if you want to become a homeowner. So that's a great place to start. And if you have a friend that owns a home, or if you have a family member, chances are that they know a reputable lender that they can introduce you to.
Yes, absolutely. And you mentioned that you do this first because your realtor is going to say you got to get pre-approved. And I know I went through my process when I bought, and they're like, well, first thing you're doing before we're even, like you said, getting in the car is you got to get your pre-approval. So definitely a great first step. And yeah, as Jennifer mentioned, she sent me this resource last night, and I was taking a look at it, and I'm like, this thing is great. So absolutely check that out. It gives a ton of steps from information on what your credit should look like, how to improve that, what that needs to be in order to, go down this path. So really a great resource. And yes, it's going to be linked into the show notes, called HomeView. Really great place to start. So we've got our pre-approval letter, figured out our lender, that we want to work with on that. Walk us through some of the other financial preparations that go into buying a house, maybe down payments, actually getting that mortgage. What does that look like once we are pre-approved and we found a great home that we want to pursue?
Well, Allison, since you brought up credit, I do want to mention that the mortgage industry uses a different FICO model than other consumer lenders. And that is important because it can be very different than what you might see. For example, if you get a credit score on your monthly credit card statement, or if you get a free credit report and you pay a little extra for them to give you your scores, that doesn't always mirror what we get in the mortgage industry because we use an older model. So that does come up quite often, especially if you have a client with marginal credit. They might be on the cusp of qualifying for conventional, and they say, well, my credit score on my Discover card statement said that it was a 680. Well, I might get a 630. And that makes a big difference from a lending
Yeah.
perspective. So that's important to know, that you can't always rely on that information when you're talking about qualifying for a mortgage. Things to be prepared for, right? So I tell people this all the time. We call it a pre-qualification. Some people call it a pre-approval. The CFPB says that the two can be used interchangeably. Really, the definition of being pre-approved or pre-qualified is has the lender actually reviewed your documents? There's been a number of times that I've talked to a borrower and they said, but so-and-so said that I was qualified. Well, did they get your documents? Did they know how you're compensated? Did they actually review your pay stubs and your assets? If the answer to that is no, then you really are not pre-approved or pre-qualified. And as a realtor, you should be asking your buyers, hey, have you submitted your documents? Because until I've actually reviewed your documents, I don't really know. You're inputting information, right? If I ask you how much money you make, and let's say you're a commission employee, and for the past 2 months, you made $10,000 a month. Most people are going to go into the system and they're going to enter $10,000 a month for income. But commission income is considered variable income. And there are very specific guidelines around how long you must be receiving that commission. It's also averaged over a specific period of time. So if you don't have all of the facts, then you really don't know what you qualify for, right? And so that's where the mortgage loan officer comes in and they say, all right, well, let's talk through this. How are you compensated? Are you salary? Are you salary plus commission? Because maybe we can use your salary, but we can't use your commission because you haven't been receiving it long enough. Same thing with the bonus. Bonus is also considered variable income. And income is, I would say, the number one Achilles heel for issues with lending. When we get down the road and you realize, what's real actual income is not really qualifying income. And there's a big difference in the two. Actual income and qualifying income are two different things.
No, thank you for making that distinction, and especially about the difference in credit too. And I think just knowing that, like I didn't know that. So that was like, news to me and very eye-opening. So I appreciate you sharing that. And yeah, that's great to be aware of. If you're heading into this, like I have, this credit score and it might come back different, always good. I think so much comes up that can be surprising, or that we're not prepared for, when you go through a home buying journey, that stuff like this, knowing as much as you can beforehand will save so much time and stress as the process kind of evolves. So I love that.
Absolutely. So there's so many things that change that as a realtor you may not be aware of. And as a consumer, you're certainly not going to be aware that Fannie Mae's made a guideline change that's going to either allow you to qualify or prohibit you from qualifying. Self-employment is a big one. The typical rule of thumb is you have to be self-employed for at least 2 years, meaning you have to have filed 2 tax returns covering 12 months each. But that's not necessarily the case, because Fannie has come out and said, well, we will consider 1 year of self-employment if you were previously employed in the same line of work. Now, we're not going to give you the higher income. So if you made more in your self-employed year than you made in your W-2 wage earner year, we're not going to give you the higher income. We're going to use the more conservative income. But if you ask most people that have been in this business, they'll say you have to be self-employed 2 years. But that's not necessarily the case, because there are exceptions to the rule. And that's why it's so important to have a good lender who knows the guidelines.
100%. And that's what I was just going to ask. So would you, trust your lender? You mentioned like having someone who's really good at this, and that's where your lender would come in and advise you and kind of guide you through that process. And they're up to date on all of those changes and rules to make sure, you're getting the best guidance and advice through this.
Absolutely. I do a lot of divorce work, and that's another thing that the agencies. So when I say agency, I mean Fannie and Freddie. So when I'm talking mostly today, it will be around conventional guidelines, because I think about 80% of mortgages that are closed are conventional. So if you are returning to the workplace after an absence, so let's say you were previously employed and then you left the workforce to maybe take care of your children, you're divorced, now you're returning to the workforce. Well, the agencies are silent on how long you have to return to work. So a lot of loan officers may not know that. Most people might think it's 6 months because that's an FHA rule. FHA wants you to be back in the workforce for 6 months, but the agencies are silent. And so that is so important because you may be able to get a job and not even have to get a paycheck yet and be able to use that as qualifying income on an agency loan. So it's so important. There's so many caveats. So I can't tell you how important it is. Just never assume that you can't get a mortgage. Just like you should never assume that you can get a mortgage.
Yes. No, that's a great distinction. There's more, so like I said, I think more surprises that come up, throughout this process than we might not realize. And that's why there are experts like your mortgage lender, like your realtor, who are there to guide you through this and, help you with any of these surprises that may pop up. Because you never know what can happen, right? Buying a home is a crazy, crazy thing. It's why a lot of people don't do it very often in our lifetimes. So yeah, there's a lot that goes into it. This episode of The Real View is brought to you by the Ohio Association of Community Colleges. Ohio's network of community colleges provides accessible training that accommodates the busy lifestyles of aspiring real estate professionals at half the price of a traditional university. With convenient locations in every part of the state, as well as online options, Ohio's community colleges are your smart choice for pre-licensing education. For more details or to start the journey to a real estate career, visit the education page at ohiorealtors.org and then click on the pre-license course locations. I want to talk about, something that's always on the topic of people's minds when it comes to buying a house, and that's interest rates, right? And we hear a lot about that. And what are you seeing with your clients? Are interest rates coming up? Is that a big thing, that are keeping some people sidelined? What's your perspective and thoughts around those interest rates?
Well, I will tell you that the unintended consequence of the sub 4% interest rate, some people are in the twos, that created an unrealistic expectation about what housing really costs. Mm-hmm. And so I do think that you have to get through the resetting of consumer expectations about what housing really costs. So I believe the 30-year historical is around 8%. So since they started keeping track of it, we're in the mid sixes right now on a conventional loan with 20% down, excellent credit. You're actually going to be in the mid sixes with 5% down or even 3% down on a home ready product. There's plenty of affordable housing products available. I think our biggest issue is inventory. I don't know what it's like in your area. I don't have a shortage of people wanting to purchase homes. They may be having to allocate more of their monthly budget to housing than what they're accustomed to or what they would like to, but they're still having trouble winning the home because if something affordable that's in good shape comes on the market, it's getting multiple offers. It's probably going to go over ask. And that does put newer home buyers at a little bit of a disadvantage because if you go over ask on your offer and the home doesn't appraise, then you have to bridge the difference between the down payment and what you've agreed to pay for the home. So I think inventory is the biggest struggle. I don't really think rates are the big issue right now. And I think the other unintended consequence of the sub 4% interest rate is that we have what's called the lock-in effect, which means nobody with a 2.5%, 3% interest rate is going to break up with that interest rate unless they really have to.
Yep.
Right. So it's a divorce situation. They have to sell the home. It's a reload situation. They have to sell the home. I mean, or the house just physically no longer suits the family's needs. And they're willing to give up a 3% interest rate for a 6.5% interest rate. So the lock-in effect is creating an inventory issue.
100%. No, we're seeing those same struggles here. I know that's, always what we hear from our members. We have to get more homes, available. I think we're starting to trend in a better direction, but I mean, we were so far into the hole with this that it's going to take a while to climb back out. So I hope we start to see that going in the right direction, and that we do start seeing those inventory levels get a little higher. But I think nationwide, I mean, the latest numbers from the National Association, they report on this quite frequently. I mean, we're still millions of homes down, as a country, which is just, a lot. And it is causing those troubles for first time home buyers and, other individuals who may not be able to go much over asking or dealing with those higher appraisals than what they're offering. Is home ownership that American dream? We talked about first time home buyers, the challenges they're facing. Is it still achievable for the average American? I know I hear so many of my friends who are like, I'll never be able to do it, or I'm just going to rent forever. I'm in my apartment forever. I don't even know how, people, are able to go through this process and come out of it with a house. And is it still possible in your line of work and what you're seeing every day? Are people making this happen? And give us a little bit of hope that this can happen if you want it.
Every day it's happening. We
Yeah.
close mortgages, and a lot of them for first time home buyers, second home buyers, repeat home buyers. I think it's just a restructuring again of the way you approach it.
Yeah.
So, yeah, you may be paying $4,000 a month for housing when you'd like to be paying $2,500 a month, but that's what housing costs.
Mhm.
So, yes, it is attainable. And what is your priority, right? And that's what I would tell any young person who comes to me and says, I'll never be able to buy a home. I would say, well, not with that attitude. So,
Yeah.
what are you going to do to put yourself in a position to buy a home? Well, the first thing that you need to do is get realistic and look at your finances and have a budget. And that's where you can turn to the HomeView certification process, where you can learn how to budget and don't spend $150 a month at Starbucks.
Yep.
Put it in the bank.
Yep.
I mean, don't buy fake eyelashes that cost $300 a month to maintain. Put it in the bank.
Yep.
So to me, it's about priority. So when I hear people say, I'm never going to be able to buy a home, that's a choice that you've made. If it's important to you, then you will figure out a way to cobble out some money to save for a down payment. If you're a veteran, you can buy a home with zero down. What a great incentive to join and serve your country.
Yep.
I tell everyone, hey, if you don't think your kid's going to be a great student in college, get them to join the military, because when they come out, they're going to have a huge leg up. And number one, that they're going to have a skill that's marketable and they can get a job. Number two, they're going to be able to get a zero down VA loan with no monthly mortgage insurance and a great interest rate, right?
Yep.
USDA, you can still buy with zero down. Now, you're going to be in a rural area, but my dad always used to say, the cat wants sausage, but he's not getting it. So if you want to live in town and live in a high rise, then you might have to rent. But if you're okay in moving out into a rural area where, you're going to be in a single family home, then you can buy a house with zero down. So again, to me, it's all about priorities, right?
Yeah, I agree with you. And I think too, I mean, we've seen so much about, rent prices, increasing, and, that it's your monthly mortgage payment sometimes lower, than what people are paying in rent. And I always like to, share my monthly mortgage payment with some of my friends who I know are renting. And they're like, you pay what? Like, is that even a real thing? And I think that's a big myth, that exists too, is that you're going to be paying more in your mortgage than your rent, which may be the case for some people, but I think, for some, it's more surprising that you might be able to save, some money through your mortgage versus than what you're renting.
Especially if you're going to buy a 3-bedroom house and maybe get a couple of roommates.
Yeah.
We see that a lot. So, I mean, I think that's a great idea, right? And you can, again, buy a home on a conventional loan with 3% down if you're a first-time home buyer. FHA's 3.5%, VA 0, USDA's 0. So I do think that it's absolutely attainable. I think the bigger issue, like you said, is that we're so short on inventory. I think, people are aging at home now, and people are living longer. So you're not seeing that regentrification in neighborhoods that we've seen, in the past decades. So I think it's going to take a little while, but I do believe that it's going to work itself out. And I should say this, that homeownership is not for everyone, and it's not the right time for everyone, right? I mean, you don't want to buy something if you think you're going to get relocated in 6 months.
Yes.
Right. Or if you're somewhere temporarily, or you just moved there and you're not really sure how it's going to work out. I mean, you want to buy something when you know I'm going to be here for a little while, right? 2, 3 years, right? Or longer, right? But also, you need to know that you're going to be maintaining that home.
Yes.
There is a cost outside of a mortgage payment to home ownership that, again, that Fannie Mae Home View certification course does a great job of walking you through what it costs, what should you be budgeting for once you become a homeowner. Because if you own a home, roofs are expensive, HVACs are expensive. You cannot be without an HVAC in Georgia in the summertime. I can tell you that.
No, it's definitely how our summers have been going lately here in Ohio too. It is quite warm, and same with winter. We've had some 0-degree days here, and you want to make sure your HVAC is in top notch shape to be getting you through those warmer and cooler months. Absolutely, absolutely. Would you say that now is a good time to buy a home? And you kind of just mentioned, like, you got to find out what works for you. It's not for everybody. Know when you're ready to settle down in life. Know when you're going to be in a place, for a few years that you're ready to make this worth it. Is now a good time to buy a home, knowing the inventory, knowing our mortgage rates? What would you say? Would you advise people to go down this path now, or would you say no, wait, for a later time?
I mean, wait for what is what I tell people,
Yes.
right? I mean, what are you waiting for? You're hoping that interest rates are going to come down, and maybe you save $50 or $100 a month, but you're going to pay $10,000 more for the same house. Well, have you really saved anything in that situation?
Yeah.
To me, if you're ready to buy, right? If you've been positioning yourself to be a homeowner, you've budgeted, you've been saving, you've been doing all the right things, and you're in a good financial position, and you want to be in that area, there's no need to wait. Best case scenario, rates do come down and you can refinance. Now, I see clever people all the time with their, marry the house, date the rate. I think that's terrible advice, because you should not buy a house that you can't afford right now.
Yes.
Because if rates don't go down, the only thing that's going to happen is your mortgage payment's going to go up, because every year your home is most likely going to appreciate, which means what? It's going to cost more to insure it. Your property taxes are going to go up.
Yeah.
Right. So I think that you should be prudent and purchase within your budget. And if rates go down, great. You can refinance and save some money. Or guess what? You can sell that house, take the equity you made on it, and go buy a bigger house or a better house.
Yes.
Right.
Yes.
So again, everybody's situation is different. Right. And so my advice might be very different to two different people on whether now is a good time to buy a house. But any person that comes to me who, again, has budgeted, they've been financially prudent, this payment is within their long lasting budget, right? We're not hoping and a praying and a wishing that rates are going to go down. So I would say yes, without a doubt. If you can find a house to buy, you should buy it.
Yes, I agree with you too. And I know, like, our realtors will say that a lot of the times too, like, my clients are waiting for this to happen or waiting for this to happen. There's no special time that's going to happen when everything lines up perfectly your way and all of those stars are kind of aligned. I think if you want it, like you mentioned, if you want it, you'll go out and make it happen and take the steps that you need to really make this financial decision for you and generations to come. And I think that's like the really great thing about homeownership is it gives you that initial investment, and like you mentioned, you get that equity back. It appreciates over time, and it really can be a great first step to build generational wealth. And that's I think what's really special about it.
Absolutely. I mean, isn't it the number one wealth builder in our country?
Yep.
I mean, that's pretty astounding, right?
Yep. Really great way to kind of kick off a really great investment and pass it down, to generations. You hear a lot of times homes and families for 100 years and really long times. And it's really, if you want it to happen, don't wait. Go out there and do it. And with people like Jennifer, with people like our realtor members who will have your back and walk you through that process, you can make it but you can do the American dream. So I believe in that too, Jennifer. So thank you so much for coming on today, for sharing this amazing knowledge. And I learned something today. I know our listeners will too. So thank you again for coming on and for your time.
Well, thank you so much. And I'm not licensed in Ohio, but I do have some wonderful peers that are licensed in Ohio. So if you have any agents or realtors that are looking for a great lender partner, tell them to reach out and I'll be happy to make an introduction.
No, absolutely. What's the best way to find you and get a hold of you?
So you can find me via my website at www.jenniferbbrown.com. All of my contact information is there. You can also email me at jennifer@nloans.net, and I'll be happy to answer any questions that I can. But again, if you have some members that are in need of a really strong lender, I would be happy to make an introduction.
I love that. That's fantastic. Well, thank you again so much, Jennifer, for joining me. And to all of our listeners, thank you guys so much for tuning in. We'll be back with you next week.
Thank you for listening to The Real View. That wraps up today's episode. You can keep up with the latest on the podcast at ohiorealtors.org/therealview and on Apple or Google Podcasts, Spotify, or wherever you listen. Have questions, comments, or suggestions? We want to hear from you. Email us at podcast@ohiorealtors.org. We'll see you next time.